Beneath the surface of our economy runs an automated network processing millions of data points every second. This infrastructure silently dictates who gets a mortgage, an auto loan, or even a job. We often treat the resulting credit score as a moral report card, a direct reflection of personal financial responsibility and character. When an error threatens that score, the natural response is to explain what happened. Consumers write detailed, heartfelt letters outlining identity theft or medical emergencies, expecting a person on the other end to read, understand, and fix the mistake. That human empathy is entirely absent. Your financial identity is processed by a digital fortress that does not know or care that you are a living, breathing human being. The gatekeeper to this fortress is a web-based platform called eOscar. It was built by the major credit bureaus to process millions of consumer disputes automatically. When your multi-page letter arrives, complete with bank statements and police reports, it enters a scanner. The emotional context and nuanced explanations are immediately stripped away. A bureau clerk reduces your entire written argument to one of 29 three-digit codes. Fraud simply becomes code 10, not mine. That single code is transmitted to the bank. With one click, they respond verified, entirely dismissing your dispute. You are never fighting a person. You are fighting a wall of code designed to process claims quickly and protect the efficiency of financial institutions over the accuracy of your file. If a machine generates a false outcome that ruins your credit, logic suggests you take the credit bureau to court and present your evidence to a jury. The industry anticipated this. When you register for an online account to monitor your score or file a dispute, you have to accept a ClickLap agreement. Buried inside is a mandatory arbitration clause, forcing you to waive your Seventh Amendment right to a jury trial. In July 2017, the Consumer Financial Protection Bureau issued a final rule aiming to ban these exact class action waivers and restore consumer legal rights in financial contracts. Barely 3 months later, Congress and the President invoked the Congressional Review Act. They passed a joint resolution overturning the CFPB rule, legally reinforcing the financial industry's shield. Between the automated processing of eOscar and the legal barrier of mandatory arbitration, the average consumer is severed from both human appeal and traditional legal recourse. But this total reliance on automation is actually the system's fatal flaw. An algorithm cannot judge morality or intent. It only reads math, and math can be manipulated. One of the primary mathematical loopholes is a strategy known as piggybacking, or becoming an authorized user on someone else's credit card account. Because credit bureaus report the entire account history to the authorized user's file, copying a stranger's decade-old card with a flawless payment history and a high limit onto your record instantly lowers your debt utilization ratio and increases your average age of accounts. Another mathematical blind spot exists in the very algorithms lenders use to evaluate you. The two leading models, FICO and VantageScore, calculate risk using entirely different structural requirements. As this timeline shows, FICO requires an account to be open for a minimum of 6 months to generate a score. VantageScore unlocks a score after just a single month of credit history. Leverage against the machine doesn't come from proving financial morality. It comes entirely from understanding and exploiting these mathematical blind spots. To bypass these defenses, attorneys advise a specific tactical approach. First, never dispute an error online. Submitting disputes via certified mail avoids the arbitration ClickWrap agreements and forces the bureaus to handle physical evidence outside their standard automated funnels. Second, if you use a piggybacking strategy to build your credit foundation, verify which scoring model a lender uses before applying. An approval under VantageScore might be a flat rejection under FICO. Finally, you must monitor your medical bills closely. While a massive CFPB rule to remove $49 billion of medical debt is currently stalled in federal court, the major bureaus must already exclude paid medical debts and unpaid collections under $500. Access to capital dictates access to modern life, and those opportunities shouldn't be controlled by hidden algorithms or buried in digital fine print. Until the laws governing this system are rewritten, true financial power comes from learning the machine's rules and mastering its game.